Hello everyone, welcome back. So in the past 3 months, IPOE stock has been like a roller coaster. So it has first dropped from $20 to $15 thanks to those short sellers. And then later last week, it has been grown back to more than $20. On last Friday, SoFi has completed the merge with its SPAC IPOE. Starting from next Tuesday, SoFi will start to trading on Nasdaq using the new ticker symbol SOFI. So today I want to talk about 3 reasons why I'm still bullish on the SoFi stock. Considering that in the short term it may be going down and up, but over the long run I'm pretty positive. So now let's get started. So in this month, SoFi has released its most updated earnings, and the earnings has been following the management's guidance and beat the expectation. So in the latest month, it has continued the 7th consecutive quarters of accelerating growth. It has achieved more than 2 million members, and it's in the guidance of its yearly goal of 3 million members. So in this quarter, comparing with last year, it has increased more than 100% due to the active financial market. When we are looking at total products sold, also increased more than 100%. And specifically for financial services product, it has increased more than 200%. So the quarterly net revenue has also grown more than 151%. To the current $21 million, and just the EBITDA is more than $4 million. The first reason I think is because SoFi has selected the right industry and right sector, where SoFi is trying to disrupt the traditional financial service industry, including banking, investment, and financial advisor. So they want to build the all-in-one platform where the users can easily borrow, save, spend, invest, and protect all in one solution. And what's smart about SoFi's business model is it's trying to utilize the resources it's already have. So for example, since people are using its banking services, including saving and spending, so that means people are putting money in SoFi's account. With that money in hand and user's permission, SoFi can actually lend the money to some other people who are in need. And they have built the products including mortgage, personal loan, and student loan to facilitate people who are in need of money. They not only help those people to get access to the money in need where the traditional bank may be difficult to do so, but they can also profit from these services. Their customer acquisition funnel is also very smart because they drive from some high frequency scenario like checking the credit score, money management, and investing to some low frequency financial activities such as personal loans, student loans, and home loans. As these financial activities would provide higher lifetime value, that would also reset the previous acquisition cost. My second bullish reason is that SoFi has the right timing. A lot of business success is not only due to the right business model, but also due to the right timing. So if Mark Zuckerberg started Facebook 10 years later, even though he's a guy with great ideas, but if he starts late and does not take the first mover advantage, I believe Facebook will not become the giant tech companies as it today. So SoFi's timing is just right. Since last year, a lot of retail customers' passion for investing has been lightened thanks to Robinhood. So that's why there's a huge number of retail customers come to the market. If we are looking at the data of other broker-dealers like Charles Schwab, Fidelity, and TD Ameritrade and E-Trade, we can find out that since last year, their revenue has grown significantly more than 100%, and this industry is definitely booming. So from the chart, we can see that SoFi's projection from 2020 to 2025, they're first gonna get started with their lending bit and then slowly transfer to their other financial services business, especially investing. knowing that in order to build this business, including investing and robo-advisor, it takes time to get the license from the regulators, to build the core team, and to develop their product and making their marketing plan. Given that since last year, SoFi is already established and be there in the market for those retail customers. So I think they already take advantage of the great timing right now. And third bullish opinion is that SoFi got the fund ready, as it has got the opportunities to go in public through SPAC, and we can see its debut on Nasdaq in next Tuesday. It's already gets the funding from the VC like Shaman's SPAC and has reached 1 billion PIPE at a cost of $10 per share. I would think that in this financial services business, it's capital heavy, and it's really important to have the fund to support the company to encounter the period when they haven't made net profit yet. If we are looking at Square's growth timeline, we can see that Square just turned positive this year after several years, probably because of the Cash App booming and its huge Bitcoin revenue. I see that SoFi already got the advantage in terms of the capital support. So with this raised capital, it can further expand their team, iterate their product continuously, and provide better service to their customers. So yeah, these are the three bullish opinions. However, I think there still have some risk associated with the stock. So currently the stock price is $20. And if we are considering that IPOE public shareholders accounts for around 9.3%, and we using the current valuation, which is around $2 billion, we can see that the total SoFi stock valuation will be $20 billion. So compared with its original valuation, it's just $8 billion. The current valuation is pretty high. I believe it's on the higher end. When in the future the interest rate going up and the valuation for the stock market will generally going down, especially for this type of tech stock, I believe there's possibility that the stocks will go down. Another potential risk is that as the company has successfully emerged with a SPAC and going public, there's possibilities that those PIPE investors will take the profit and go away. And also for their internal shareholders, meaning their employees, they may also have the possibilities to share the stock to take some of the profitabilities, since the company do have the liquidity right now. So that's also a factor may affect the stock price. So previously I owned like 600 stocks and I sold 400 stocks at the price around $20. So my strategy is that when the stock price drop further, like drop to $15, I will buy more. Given the potential risk, I do have confidence on SoFi stock in the long run. So what do you guys think of this type of SPAC stock or fintech stock? Please let me know in the comments down below, and I will see you guys in my next one. Bye.